Hey everybody, Ben Engelman here again with Friedrich I Realty, and just wanted to give you a quick weekly update for the week of March 13th, 2023. So yeah, I'll get right into it here. And I want to give it a little bit of clarification too. If you're watching these videos every week, I really appreciate it for one, and hopefully you do find it helpful as you're looking in the Ames area. But want to give us some clarification on what we're looking at with these numbers, because right now, when you look at pending and it's 18, there's more pendings than that are actually active right now. But what we're looking at is how many pendings have went pending this month. So we're just doing it on a month by month basis. So far this month, 18 houses have pended, 16 so far have closed, and 53 are active for the month. So it's not a running total, because right now in the Ames area, there's about 60 that are pended. So what you're going to see is that close number go up quite a bit faster towards the end of the month here as well. And those are going to be, 30 to 60 days, the lag of those pendings. So the things that went pending last month and the month before, which you're looking at, your 31 pendings last month, a lot of those are going to close here in March. So things that penned end of January into February are going to close into March. So when you look at those pendings of 31 and 34, we have right now pended in Ames, pending right now 60. Those you're going to start to see a lot of those. But so far this month, we've closed 16. Like I said, 18 pending. When you look at the active market, what you're looking at here is 21 resale, single family home resales active right now. New construction, looking at 25. That number's staying pretty steady through the year. Beginning of the year in January, a lot of those went off market, but we definitely need more houses. So when you're looking at townhomes and condos, I know for a fact that this condo is pending, and I believe even one of those townhomes is pending as well. When you see this GH, that's actually Green Hills. So Green Hills is a 55 and over community, a little bit different scenario, but they are homes, whether it be a condo or a townhome, that type of scenario. But you're looking at having 7 on right now. So that stays pretty steady as well throughout the year as those come on and off the market. So if you are 55 and over and you're looking for more of that senior living, we can definitely help you out there as well. Over here, when you're looking at the current rates, 6.68, we've got a couple different rates that are down around 6.5 to 5.99. It just depends on the institution. This below 7 rate, that's nationwide averages for a well-qualified buyer. That's really what you're looking at. But depending on where your situation is and what type of loan you're getting, if you're a VA buyer, your rate's going to be quite a bit lower. If you're FHA, it's going to be quite a bit lower. Same with USDA. So different stipulations on each one of those. But what I'm really looking at is where's the rate at now, and what's going to be happening with it. With that bank collapse and that just happened, I'm sure a lot of you have heard about. Plus, the Fed's, the word on the street was that they were going to raise about 75 basis points. Switched on Friday to roughly a quarter, just 25 basis points for the funds rate. If that happens, we'll see those rates come down a little bit quicker. They're just basing that on inflation. Housing has a lot to do with that, and nationwide, things are definitely slowing in the real estate market. In Ames, Iowa, as you all know, if you've been in the Ames area or been hunting for houses here, it's not as fun. So not much inventory. We need a lot more inventory. When you look back, and I know I refer to this, but just that active listings going from 2020, look at these active listings, and then it just fell off a cliff. We really need that number to get up there. And with interest rates being so high, why would you give up your 3 to 4% rate? 50% of all mortgages held right now are under 3.5. And I think it's around 75 or 80% of rates are below 4 or 4 or below. So when you look at doubling that rate or even going up 2 to 2.5%, you're losing anywhere from 25 to upwards to 40% buying power. So you sell your $300,000 house and you want to go buy another $300,000 house, that principal and interest payment is going to literally be 25 to 40% more. So that's where the rubs coming in is, if I don't have to move, why would I move? There are other options. Well, when you get into the new construction realm, there's a lot of different opportunities to do some buy downs on different loan programs. Definitely get with your lender. We got a couple different lenders that we work with that we really love, and also check with the builder. So a lot of that stuff can be built in on the front end, so you can weather this storm of these high interest rates until they come down and start. If we could start seeing more normal between 4 and 5, which isn't normal over the last 30, 40 years, but would be more normal for our minds here, that's going to be a better situation. You're going to see more houses start to come up, because then when people do upgrade or downgrade the size of their house or want to move, they're going to have more motivation to do so just because of the payment. So if you have any questions about any of this, I'd love to have a conversation with you. My team members would love to have a conversation with you. So feel free to reach out. Doesn't cost you anything. It costs a little bit of time, and hopefully we can teach you something. We do this every day, day in and day out. We do it full time. So thanks for watching this, and we'll talk to you here soon. Take care.